You don't fool me. You don't fool me. You don't fool me. You don't fool me. You don't fool me.
One of the latest developments in finance and investing, or maybe a fad, is that of the so-called cryptocurrencies. There's a number of them. I think I'll just focus on the two major ones, Bitcoin and Ethereum, which has their currency, the Ether. In looking at Wikipedia, Bitcoin's a cryptocurrency, electronic cash, and you can trade it peer-to-peer without dealing with anybody else. It's backed up by something called a blockchain, and its history has been a little bit colored. There's millions of users out there, and it's been criticized for illegal transactions, and mostly it may be in an economic bubble. Another major one is Ethereum. Again, this is from Wikipedia. It's done a lot better than Bitcoin, but we'll see it's had some problems. It is associated with computing, and you can mine for these, so to speak. It's had a major problem with something called a DAO, which was siphoned off by a vulnerability of the code and lost a third of its value. Here's a chart of Bitcoin across various time periods, and you'll see the classic bubble behavior. And speaking of bubbles, maybe a little history of economic bubbles is in order. A review of financial economic bubbles has to start with the 1634 tulip mania. Yes, one bulb equaled the value of a house. And the uptake there is it took them a long time to find out that the most sought-after striated tulip could in fact not be reproduced. It was the result of a virus. There was the 1720 financial collapse in France and England associated with a South Sea Company. And then here in the U.S. we had panics in 1819, 37, 57, 73, and 93, and 1907. And then 1929 and 1987, and of course 2008, we saw huge collapses in the stock market. As an aside, you'll notice a roughly 20-year periodicity in those dates, perhaps reflecting the weather, sunspots, the cycle of Jupiter, but that's another topic. It's about at this point where the topic, if taken any further, gets into polemics, heated arguments, loss of friendships. But let's put this in perspective. We've seen them before. We'll see them again. We've seen problems. We've seen great increases and decreases in valuation. But the big picture is diversify. And it's been often said that for the more speculative portions of anybody's account, keep it to, say, 5%. It's your play account. It's your Las Vegas account. And I think that's the best piece of advice from DrCinvests.